Hi, I am Anna. I come from www.ntvforex.com. Europe looks to mixed start despite encouraging Chinese manufacturing data analysis. http ntvforex.com News ID D971BE 8/3/2026 40:31 am. European bourses look set to open at the start of the new month in a mixed fashion amid rising coronavirus concerns, simmering US-China tensions and ahead of manufacturing PMI data. Coronavirus infections are picking up in some US states. The state of Victoria in Australia declared a state of emergency and tightened lockdown restrictions. The UK has also seen localised lockdowns put into place in parts of Manchester, Lancaster, and Yorkshire as transmission rates increase. Concerns that the economic rebound is starting to stall as coronavirus cases rise and restrictions are tightened in some regions is weighing on demand for equities, off seti upbeat Chinese data. China's recovery gathers momentum. Chinese manufacturing PMI data is bringing some optimism to the table, pointing to the economic recovery gaining momentum. The Caixin Market Manufacturing PMI showed that China's factory activity expanded at the fastest pace in nearly a decade in July as domestic demand continued to improve after the coronavirus crisis. However, employment and export orders remained weak, with export orders falling for a seventh straight month as overseas demand is yet to pick up. The PMI rose to 52.8 in July, up from June's 51.2 and well ahead of expectations of 51.3, where the level 50 separates expansion from contraction. The upbeat data adds to mounting evidence that the economic recovery in China is getting back on track faster than expected. Attention will now turn to manufacturing PMI data from UK, Europe. The data is expected to confirm preliminary readings of 53.6 and 51.1 respectively. Not just TikTok. Rising US-China tensions are posing another threat to sentiment after President Trump hinted to a widening of measures against Chinese-owned software which is deemed to pose a threat to national security. So far TikTok is in the firing line, however recent comments from the White House suggest an expansion in targets beyond the video sharing app, a move which will continue to stir tensions between the world's two largest economies. HSBC profits dive. Profits at HSBC have plunged 65%, missing forecasts as the coronavirus pandemic continues to batter business. In line with its peers, HSBC set aside more for bad loans provisions than expected and also warned of the impact of rising US-China tensions on businesses. Europe's largest bank set aside $3.8 billion in bad loans provisions, up from $555 million a year earlier and well ahead of the $2.7 billion forecast. Profits plunged a whopping 82% to $1.1 billion year-on-year, well short of the $2.5 billion estimated. The US-China spat is making for a very difficult climate to operate in and investors are giving the stock a wide berth. 2 straight quarters of vast loan losses and a deteriorating economic outlook pose serious challenges for a bank which was already struggling. The share price is trading at levels last seen in 1998 and the prospect for much pickup is low. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.